Hello everyone, so today we are going to solve Accounting O Levels paper 11 May-June 2024. So let's start. Question number 1 is which task is performed by a bookkeeper? Analyzing accounting ratios, interpreting the income statement, and presenting and preparing a statement of financial position are all wrong. Part C is correct because all the other things are done by an accountant. The simplest of the task is done by a bookkeeper, and then communicating data and further calculating profits and losses is done by an accountant. So question number 2 is similar to question number 1. Which statement is correct? Accounting involves measuring profits and losses is correct. Accounting is a recording of financial transactions is wrong because it is done by a bookkeeper. Bookkeeping involves communicating data. It is done in accounting, and Part D is also done in accounting, not in bookkeeping. So the answer of question number 3 is A, because discount received is recorded in cash book, not in general journal, purchases journal, or sales journal. Then in question number 4, the analysis columns of a petty cash book show the following totals: postage 20 and stationery 31. How should these totals be posted to the ledger? So postage and stationery both are the expenses, so the nature of expenses is debit. So credit bank account with 51, it is not, because it is petty cash book, it does not involve a bank account, so first we cancel that option. Then credit postage account with 20 and stationery account with 31, these are expenses and the nature is debit, as I told you before, so cancel this as well. Then debit cash with 51, because these are expenses and we made expensive, we want debit cash account but credit cash account. And then debit postage with 20 and stationery account with 31 is correct, so part D will be the answer because expenses has a debit nature, and we are debiting postage and stationery account, so D will be the correct answer. Now moving on to question number 5, which business documents are not entered in the books of prime entry? Not entered. So credit note is entered because it tells you about sales returns, and debit note is not entered, invoice is entered, and statement of account is not entered. So 2 and 4 will be the correct answer. So question number 6 has a heat and light account. So a trader has the following ledger account. So the heat and light account is an expense account, so there is an abbreviation for it. It is PAAP, PAAP, and for an income account it is APPA, APPA. So there is a format for it, and if you remember of this format, then it will be easier for you. So I'll draw the format here. So as the abbreviation says, PAAP, so on the debit side we start from prepaid brought down, then accrued carried down, and then we move to the credit side. It is accrued brought down and prepaid carried down. Then on the debit side we will write bank account, and on the credit side we will write income statement. So moving on to the question, it asks on 1st January year 2, what does the balance sheet presents? So it is on the credit side brought down. So on the credit side there is accrued brought down. So accrued means outstanding, so part A will be the correct answer. And in question number 7, which statement does the trial balance is correct? So part A will be the correct answer because it is not part of the double entry system. It does not prove that all items have been placed in the correct accounts, and it does not prove that all transactions have been entered in books of account, because there are errors not affecting the trial balance. And in question number 8, Trevor prepared his financial statements for the year ended 31st December. He then discovered that he had omitted to record a cash payment to $40 for insurance for the 12 months ending 30 November 2021. So there is 1 month extra. So in question number 8, Trevor had omitted to record a cash payment $240 for insurance for 12 months ending on 30 November 2021. So the year ending on 31st December 2021 has only 1 month of payment of insurance, which is 240 divided by 12. Then what was the effect of the error on his statement of financial position? Cash will be overstated by 240 because other receivables will be understated by 220, and capital will be overstated by 20. So part B will be the correct answer because it will because we have made a cash payment, so we should have deducted 240. So cash is overstated. Then we have made a prepaid account, we have made a prepaid payment, so the prepaid expense is included in other receivables, so we should have added prepaid expenses and other receivables, so it is understated by 220, and we have overstated the profit, so we have overstated the capital by $20 as well. So a payment of 68 for insurance has been entered in the insurance account as 86, which double entry will correct this? So part C, because what could have been the correct answer is that we should have debited insurance account from 68 and then credited the bank account or cash account from 68, but we debited more, so we will reverse it. We will credit the extra amount, which is $18, and then we will use the suspense account. So in question number 10, a business has received a bank statement. The bank statement shows the following entries. So just remember that bank statement is has the opposite nature to cash book. So if we earn an income or we gain money, then this is credited in the bank statement while it is debited in the cash book, and if we lose or if we make an expense, then it is debited in the bank statement. So you can notice that the nature of entries is different in the bank statement and it is total opposite in the bank statement. So first is a check issued to a credit supplier, because we have made a payment, we have lose money, then this is debited. Then a check received from a credit customer is, I've written credit, then this will change to debit. Let me change into debit first. Okay, so the first one, check issued to a credit supplier, is debit. A check received from a credit supplier is gain, so it is credit. Then a monthly rent payment made by standing order, it is a payment, so we have lose, then debit. Charges made by the bank, we have to give it to the bank. Expense, this is a debit. So which items appear in the debit column of the bank statement is part A. And question number 11 is, on 31st May, the bank statement of a business showed a positive balance of 1790. Comparing the bank statement with the cash book, the following items were discovered. The bank had charged would not be included in a sales ledger control account. So sales ledger control account is about is a trade receivables account, we can also say that. So cash sales is not recorded because it is about credit sales and how much payment is left, and others are in the sales ledger control account. Then question number 13 is, Nadia provided the following information for the month of July. There was no credit balance on the account on 1st August. What was the debit balance brought down on the sales ledger account on 1st August? So we make a sales ledger account. So the debit balance is 1750 and the credit balance is 215. Then for the month of July, total of sales journal, which is the total of credit sales, is 5500. Then we will write it on the debit side. Then on the sales returns journal, we will write it 360 credit side. Then checks received from credit customers, we will write on the credit side 4840. Then is recoverable debts written off, this will decrease our balance, so we will write on the credit side 280. And then interest charged on credit account, this will increase our balance of $5 on the debit side. Then we will calculate, because there is mentioned that there is no credit balance in the account on 1st August, which means that there will be no balance carried down on the debit side. So the balance carried down on the credit side will be 1560. So the answer will be B, because this balance will be brought down on 1st of August on the debit side. Moving on to question number 14. Samir runs a car hire business. He received cash payments for car hire. He also received the proceeds from the sale of an old vehicle. Which type of receipts were they? So payments from car hire, which is his business, which is normal day-to-day revenue, will be a revenue receipt, and proceeds from sale of an old vehicle is a capital receipt, because this is not done by in a day-to-day on a day-to-day basis. Then question number 15. The following ledger account appeared in the books of a trader. Rent receivable account is an income account, and as I mentioned in the video before, for income the abbreviation will go APPA. So we'll make an account so that it makes things easier. So according to the abbreviation, we will start from the debit side. We will write accrued brought down on the debit side, then income statement, and then prepaid carried down. Then we will move on to the credit side. We will write prepaid brought down, then bank, and then accrued carried down. So then we will move on to the question. This will make things easier for you, so I would recommend that make an account for it. So if you look at the format to calculate the charge for the income statement, we will add 400 and 3600 on the credit side and subtract 600, which will give us 3400 on the debit side, but this is the rent receivable account. In the income statement account, it will be 3400 on the credit side. So we will mark A as the correct answer. So question number 16 is Mandeep depreciates his motor vehicles at the rate of 20% using the straight line method. A full year's depreciation is provided in the year of purchase. Mandeep bought a motor vehicle on 1st January 2017 for 20,000, and he bought a second motor vehicle for 10,000 on 1st January 2020. So what was the depreciation charge on motor vehicles for the year ended 31st December 2020? So because there is a full year depreciation, we don't need to this is not a very complicated question, so we will simply depreciate 20,000 by 20% and then 10,000 by 20%. So 20,000 by 20% gives 4,000, and then 10,000 by 20% gives you 2,000. Then we will add both of them. Which will give us the answer of 6,000 part D. So question number 17 says, why does a trader maintain a provision for doubtful debts? So number 1 is to ensure amounts owing to the business for which payment is unlikely to be received or recorded as an expense. This is correct. Then to ensure the trade receivables of the business are not overstated. This is correct. To identify credit customers who are not able. This is wrong, because this is bad debts, not doubtful debts. To for the amounts from credit customers which are unpaid. This is also wrong. So part 1 and 2 will be correct. So part A. So question number 18 is why inventory valued at the lower of cost and net realizable value. So it goes with the prudence and matching concept. So according to the concept, the correct answer would be part B, to avoid overstating profit and current assets, because the closing inventory is added in current assets and the profit will be overstated if the value of inventory is overstated. And question number 19 says, at the end of the financial year, Cindy valued her inventory at cost. The valuation incorrectly included damaged goods costing $300. Cindy estimated these goods could be sold for $100. What is the effect of correcting the inventory valuation? So this is written at the end of the financial year, so this is the closing inventory. So the closing inventory is less 200. So the gross profit would decrease by 200 as we would decrease the closing inventory by 200, which will increase the cost of goods sold and decrease the gross profit. Then profit for the year will also decrease by 200 as the gross profit decreases, and the current assets will also decrease by 200 as the value of closing inventory decreases. So part A would be the correct answer. Then question number 20, which business is not a service business? So flower shop is not a service business, others are a service business. Then question number 21 is, a trader was preparing her statement of financial position. At 30 June 2021, she had 4 loans. What was the total amount of loans that should be recorded as non-current liabilities at 30 June 2021? So read that as non-current liabilities, which means that the loan should be more than 1 year. So if we calculate 30 June 20, if we look at it, 1st December 2021 is not more than 1 year from 30 June 2021. Then others, for December 2022, for September 2023, and December 2025, all of these loans are for more than 1 year. So we'll add all of them, which will give an answer of 24,000. The correct answer will be D. So what is in a partnership appropriation account? The capital contributed by each partner? No. The distribution of profit and loss amongst the partners? This is correct. The partner's current account balances and the interest on a partner's loan account, both of these are wrong. These are shown in either the income statement or the financial statement of financial position. So question number 23 is, Rajit and Sunil formed a partnership on 1st January 2019 but did not prepare a partnership agreement. They provided the following information. They decided to draw up a partnership agreement for future years. So when there is no partnership agreement made, there is no interest on capital, but when we will make a partnership agreement, there will be an interest on capital, which will benefit Rajid more because he has contributed more, 20,000 more from Sunil. So part A would be the correct answer. Then 24 is, a company supplied the following information. What is the total equity? So you will add issued and paid up share capital, general reserve, and retained earnings, which gives an answer of 380,000 C. Long-term bank loan and debentures will be the non-current liabilities, not part of the equity, which apply to both debentures and preference shares. No voting rights, they both don't have voting rights. Then fixed rate of return, they both have fixed rate of return, and included in capital employed. They both are included in capital employed, but part A would be the correct answer, since this applies to everything, applies to both debentures and preference shares. Question number 26 is, AB Sports Club runs a cafe for the use of members. The treasurer prepared draft financial statements which showed a deficit of 700 and an accumulated fund of 4600. A deficit means there is more expenses than the income earned. Then he discovered that the closing inventory of the cafe had been overvalued by 50. So the closing inventory is overvalued, which means that the cost of goods sold is undervalued by 50. You will add 50 in the cost of goods sold, which will decrease the gross profit by 50, and so the profit from the cafe will be decreased by 50, and this will increase the deficit by $50. So the deficit will increase by 750. Very smart, 650. So I will correct it. So the deficit will increase by 50, so the deficit will be 750 now. Then as the closing value of closing inventory would decrease now, then we will the accumulated fund would also decrease. by 50. So the correct answer will be C. Question number 27 is which accounting statement prepared by the treasurer of a sports club provides a summary of all the monies received and paid out during the financial year? So bank reconciliation statement and statement of financial position is crossed, and income and expenditure account is also receipts and payment account is C, as it is written, it is mentioned that received and paid out, so you can take that as a hint. Then question number 28, at the end of the financial year, a manufacturing business owed rent on its factory. The business adjusted the financial statements to account for this. It will have no effect on the prime cost as it is an indirect expense, not a direct expense. Then the cost of production will increase because we will add it because it is an accrued expense, and we have to add indirect expenses to calculate the cost of production. So we will add the rent of factory in the cost of production. So the cost of production will increase, and the gross profit will decrease because the cost of goods sold would increase as the cost of production would increase. This will give a lower gross profit than before. And question number 29 is what is the direct cost for a manufacturer? So production royalties is a direct cost, others are not a direct cost for a manufacturer. These would be either selling costs or indirect costs. Then question number 30, a business uses 20% markup to arrive at its selling price during the year. It made purchases of 35,000 and opening inventory is 7,000 and 2,000 as the closing inventory. So we will add 7,000 and 35,000 less 2,000 to get cost of goods sold. So according to the markup given to us of 20%, we will add 20% to it to get the gross profit. So we will add 20% of 40,000 to it to get the sales, which is 48,000. We can also do that. We can calculate the gross profit first from the markup, and then we can add gross profit with the cost to get this answer, which is part D. So question number 31 is what is needed for the preparation of a statement of affairs? Values of assets and liabilities is needed, of course, because there is liabilities and assets to calculate the capital. Then question number 32 is a trader provides the following information. What was the trader's trade payables turnover? So to calculate, we will take credit purchases for the year, which is 108,000, and divided by 14,000. If opening trade payables would have been given, we could have added them both and divided by 2, but right now when it is not given, we will divide 108,000 with 14,000, which will give an answer of 7.732. So we will just write 7.71. Then because it is required to give it in days, then we will divide 365 with 7.71, which will give us 47.3 something, and we will round it upwards because it has to be given in days, not in decimal points. So the answer will be part D, 48 days. Question number 33 is George provided the following information. His liquid asset test ratio was 1.2:1. What was his bank overdraft? So the formula for this is current assets minus inventory upon current liabilities. So we will only take trade receivables as current assets and then trade payables plus bank overdraft as current liabilities. So we will do that 18,000 So then I will write 18,000 divided by 8,000 plus x, which is the bank overdraft, is equals to 1.2. So then we will cross multiply, and then x is equals to 18,000 minus 9,600, which is 8,000 multiplied by 1.2, and then we will divide it by 1.2 to get the bank overdraft, which is 7,000 part A. Then in question 34, the following ratios have been calculated for a trader. The gross margin has increased from year 1 to year 2 by 5%, from 15 to 20%, and the return on capital employed has decreased from 9 to 6%. What explains these changes? Drawings have increased by more than profit for the year. This is wrong because we are talking about gross margin, not profit margin. Then gross profit has increased but profit for the year have decreased. This cannot be because if gross profit would increase, the profit for the year would also increase but will not decrease the return on capital employed. Profit for the year has increased and capital has been introduced. This is correct because then the gross margin will increase and the capital employed would also decrease. Then profit for the year has increased with the long-term loan has been repaid. So the repayment of loan would decrease the capital employed, which will increase the ratio of capital employed, which is not the correct answer in this case. In question number 35, the correct answer is B, according to the principle of realization, as revenue will only be realized when the goods are delivered to the customer.